Hey and welcome to this video. So I hope you've been doing well. So before I begin, make sure you hit the subscribe button and hit the bell icon, so that you don't miss out on any video I upload. Yeah, so let's get into it. So I want to do a top-down analysis on EURUSD from the monthly time frame to whichever the time frame will find our entry, refine our entry, and find our stop loss and possible take profits. Okay, so first I am on the monthly time frame. As you can see, where we are on the monthly time frame right here. So what we want to do right now is to um to first get the market direction. That is what you go to do on the higher time frames. When you're doing your analysis on whichever pair, make sure you go to the higher time frames, get the market direction before you come to the lower time frames, or to whichever your time frame of interest is, to get your specific entry points. Okay, so first of all, we want to study the market structure on the monthly time frame. As you can see here, we had we had a very nice bearish momentum here with a very nice corrective expansion and corrective moves. So you can see we had this particular expansion right here, and then we had this uh, retracement and expansion and retracement and an expansion and retracement. One thing you should notice is that these highs are being respected. Rather, price is not going past the highs that were created in the market. All these highs, price is not going above them. So price is respecting them. That means we are trending bearish. So we are not breaking any highs. So it means we are very bearish on the monthly time frame. So this is giving us a very nice idea, or something we can now use when we are on the lower time frames to look for our entry. So we know if the market is our friend, we all know that, and the trend is our friend and the trend is bearish, it means we are looking for bearish setups. Okay, in the event that you find a bullish setup, you have to make sure, or you have to know, that it's either a medium risk setup or a high risk setup, and it means that anything could happen in the market. So you have to reduce your risk, and you will be trading a pullback. Okay, nice. So we have this idea already on the monthly time frame, and you can see around this time, price after this strong bullish momentum, price gave us a very nice particular this supply around here, and you can see the supply was respected very nice. Price got there, and then we had this small bearish momentum, but price again retested to sweep any liquidity pool or any liquidity that was left on the lower time frames. Okay, because remember, this is the monthly time frame, so you might not see the nitty-gritties or the small details that you want to see. Okay, so we had this, and we price traded from this supply very nicely, and we have created this low right here now. Okay, so that is it. That is majorly what we are looking at on the monthly time frame. So if we switch down to now the weekly time frame, now we are now looking for possible points where we can get in the market, or where we can get our entries set, or our limit orders set. Now, on the weekly time frame, I want you to notice something very important. As well, you can see price or market has been trending bearish for quite a long time, and you can see this is a very strong bearish momentum, and I'm expecting, or I'm thinking that this is now a corrective move. All this is a corrective move, because after all, I'm not sure. Let me just check. Are we past the 50% of give me a minute. Let me just check for you. If you're past the 50%, then maybe we can anticipate for something else, but that is the high. So that is it, and then this is the low right here, and you can see price has traded past the 50%, and but not majorly, and that cannot give us a very that can't give us a clear it can't be clear that we are now bullish. Okay, we have not switched bullish, and we haven't seen anything bullish right now. Okay, majorly on the higher time frame. Okay, now you can see right here, there was this change of character, I'm going to call it a change of character because I use change of character to differentiate between major breaks and minor breaks. Okay, so for this one, whichever I name a change of character, just know it's not a major one. Whichever I name a market structure shift, that is a major one, because stuff like that. Okay, so here again we had another change of character right here. Now that switched us bearish. Okay, so this one switched up. This one switched as bullish, so this one switched as bearish. So you can see price traded and closed below the this low that created the most recent high, or the highest, the high of the market. Okay, price traded below and closed below. So we expecting to see again another break of market structure. So in case price trades and closes below here, that is when you can have a potential break of market structure. Okay, let me just, that is where we can have a potential break of market structure. But as long as price has not traded below here, we have no break of market structure right now, and the market is currently undecided, because after all we haven't gone past this high, right? And we also haven't gone past this low. So it means that the market is very, very undecided. So we are just in here. That means we are choppy, and clearly we are choppy. If you look at the price action from here, from this candle right here to around here, clearly we are very choppy. We don't have any major direction. You can see market just making some impulsive move and then a corrective move, impulsive move, then a corrective move. Okay, so that is what I'm saying. Okay, so from there we have that change of character. It means that we're looking at what, we're looking at a bearish setup. Okay, we're looking at a bearish setup on EURUSD on the weekly time frame. And one thing I always tell, if I always tell people, if you also use trend lines, in as much as then it's not a good, it's not a very good thing for you to do, but you don't use it as a strategy. You use it as a confluence. Okay, so you can use this trend line to draw from this high and draw it this way. You can see market has been respecting this trend line for quite some time, about 3 times. So you can see, a minute, let me just mark for you. So you can see market has respected that trend line resistance 3 times. So we are also expecting to see market again respect it. But there are two ideas, of course, in the market. So first thing you might be expecting is to see market again respect that trend line. Okay, and the other thing you might be looking at is to see market disrespect that trend line and continue with um with our trend, our bullish trend. Okay, so we might have something like that as well, right? So we don't know yet. So we have not yet found a specific point in the market where we can get in right now, even as of now on the weekly time frame. Okay, so what we do again is to switch up to another lower time frame, like now the daily 1 day time frame. Now on the daily time frame, it's very nice. Very nice. I hope you guys are with me. I hope you guys are understanding me. Do not get lost on the way. By the way, I have a free WhatsApp community. The link is on my bio. If you want to join and learn, make sure you hit the link that is on my bio or on the description of this video, so that you join our free WhatsApp community, so that you learn most of these things, and we also share ideas there. Now on this time frame, you can see that price is also making a series of highs that are still being respected. It means that we are not breaking any highs. So you can see we are breaking most of the lows. So you can see here we broke this low here, and we broke this one here, which is okay. So we're expecting again to see a break of this low. Okay, and I think the market is moving very nicely. It's trending bearish very nicely, because we can see an expansion. We can see expansions and corrections, expansion, and then we had a minor change of character right there, and then correction, and then expansion, minor change of character. You can see there is a very good market structure or price action around there. But on the daily time frame, you can spot around this point around this point when, okay, sorry about that. So on this daily time frame, you can spot there is a very nice demand right here. There's a very nice daily demand right here, or that daily candle demand right there. So I always mark my demand candles as the last bearish candlestick before bullish momentum. Okay, so this is the last bearish candlestick that was created by the market, that would, or rather that was printed by the market before this bullish momentum began. Of course, we have had this inefficiency or this imbalance right here filled by the market. Here you can see, so there is a very clear price action going on in the market right now. You can see this imbalance has been filled, but this inefficiency right here has not yet been filled. Neither has this bullish order flow been filled. Okay, I hope you guys understand the difference between a bullish order flow and a bullish order flow and order blocks. Okay, now nice, very nice. So you can see right around here there has been a liquidity sweep. There's been a liquidity sweep, or rather you can even call it whatever you want to call it, or you can even say it's a break of market structure, whatever, but I want to call it a liquidity sweep. Remember, we trade different strategies in different ways, so don't come at me. Okay, if you want me to explain to you why this is a liquidity sweep, just come over to my inbox. I'll explain to you why it's a liquidity sweep and not what, according to my strategy, and why it might be a change of character for you, a break of market structure, sorry, for you, for your strategy. There is no problem. We trade different ways as long as you make money. Now, nice. So right now, I'm assuming, or that this has been an inducement in the market. So market has not yet um gotten to our daily demand. So I'm expecting to that this is an inducement, and this is, remember, these all these are just simulations or your thoughts or how you want to trade. So these are daily demand. Okay, this is an inducement and this is the break of market structure, and you can see this demand led to this break of market structure here. Though this is not a major break of market structure, but it's okay. It led to that break of market structure, and as well this change of character here. So this is the clear high. This is the clear high. So we can say this is now our dotted change of character, and I hope you by now you understand why I say it's dotted. Yeah. So here we had this was a very nice break of market structure. After change of character, we must spot a break of market structure, and then we have had this liquidity sweep and then an inducement. So I'm expecting to see price drop to activate our orders at the daily demand. Remember, at any inducement point, or mostly at inducement points, there is often liquidity resting there. So in case market drops to sweep liquidity that is resting on this inducement, we'll have price activating our orders on this demand area. But now you guys can seriously spot that, or say that this demand is a huge one. Where do we get in? Because the demand, or the order block, is 66 pips away. Okay, and it's 66 pips away. So you have to refine your entry, or you have to pay to find a specific point where you can get in the market. Now there are two ways you can do this. Now the first way is just assuming that price will get at the 50% of the demand. Okay, 50% of demand. If you just come and use this parallel channel, place it at that point, at the highest point, of course, and then you expand it this way. So now you'll get your 50% around here. So that is where you place your entry. You say at the 50%. Okay, and then of course you target that point in the market, or you expect to see price get there, and then you place your stop loss just slightly below the demand. Okay, that is one way. That is one way you can do that. And then the other way is now going to the lower time frames to refine your entry, or to find such a setup. To find such a setup on the lower time frame, you find a demand on the lower time frame, a liquidity sweep, an inducement, and stuff like that on the lower time frames. So you can start by going to the 4-hour time frames, but if it was me, I go directly to the 1-hour time frame. But because I'm teaching you, I have to go step by step. Now on the 1-hour time frame, you swipe, or you move your chart to the point where you had the demand. I don't know why my network is having trouble. to the point where we had our demand. That is the point. So you can see there is a similar thing. There is a demand. You can see this bearish candlestick. It's a demand, of course. And then we have this is a very nice break of market structure. You can see the same structure on the daily time frame. There was liquidity resting here. Right here, this is liquidity that has been swept, and you can see price has, this is a very nice inducement, because you can see there is a lot of rejection. You can see these candles, lower wicks are very long, so there's a lot of rejection. So clearly this might be an inducement, and price is just gathering more volume to push to our daily demand. Now you can't find a clear entry point. Go to the lower time frame, on the 1 hour time frame. You want to see if we can get a specific point, rather a refined point where you can get in the market, and it's not high, it's not that risky as the rest of the points. Okay, that is the aim, or that is what we call refining your entry. Okay, now you come to this to the point where your demand begins from. I don't know. Yep. Let's wait. I don't know why my network is having some niches or some problems. So you'll wait to see price get you'll wait to see price action at this demand. Okay, on the 1 hour time frame. Now you want to see what happened on this on our demand. Now you can see there is this, or this is now going to be our bullish order block. You see this candle before the bullish momentum began. In as much as there was a liquidity sweep and price pushed below it. So what you do is, now you can take your horizontal rail and then place it right there. Then of course this small rectangle, sorry, you don't need it, and then you can go back to your time frame, or the time frame you use to do your analysis, because remember we just came to the lower time frames to refine the entry. We are not going there to stay there. Okay, so of course now you'll be going in at that point, because now we refine our entry. So you'll place your limit orders around there, and then you can aim there, and then you stop loss just slightly below there. Of course, for this case, this is a swing trade, and your stop loss might be wide. It depends on your size and the size of your account. Don't just trade because you think this setup is a clean one, it's a good one, so you just get in. No, make sure you understand, and you get where you're going in for this trade. Okay, yeah, so that is it for now. Thank you for tuning in, and sparing your 17 minutes or 18 minutes or 20 minutes, whatever the time this video is going to be, to go through this video from the beginning to the end. Okay, so I hope you learned something. I hope you're going to improve on something, or you're going to improve from where you were yesterday, today, and then tomorrow. Remember, don't give up. You only one trade away.